Welcome to our deep dive on securing the best private party auto loan rates using credit unions. First, I'll set the stage for why credit unions consistently beat traditional banks, especially for used vehicles and private party sales. Then, we'll walk through the exact steps, documents, and strategies to get approved and pay less interest overall. Finally, we'll finish with a smart payoff plan that turns a long loan term into a short-term commitment without sacrificing cash flow. Next, here is our agenda. We will start with why credit unions offer better rates. Then, we will unpack how private party financing actually works and the documentation lenders require. After that, we will cover minimum loan thresholds and term rules that can surprise buyers. Moving forward, we will lay out a step-by-step approval roadmap and a high-impact payoff strategy. Finally, we will check your understanding with quick quizzes, wrap up key takeaways, and give you next steps. First, let's explore why credit unions tend to beat banks for used and private party vehicle loans. Because credit unions are member-owned, they typically pass more favorable rates back to members rather than maximizing profit. Additionally, many top nationwide credit unions have specific programs for older vehicles that banks often avoid. In practice, this means lower interest rates, more accommodating underwriting on high mileage or older cars, and more human support throughout the process. Consequently, if you are serious about buying private party, membership at the right credit union is essential. Now let's break down how credit unions deliver better deals. They often offer lower APRs for used and private party purchases. They also accept older vehicles that banks might decline outright. Because their model is member first, they can move faster on pre-approvals and decisions. That said, they manage risk rigorously, which means they will check the vehicle's value against NADA or Kelley Blue Book and require perfect documentation, including the bill of sale and the title. In short, smoother approvals and better rates are possible, but they come with strict verification and paperwork standards. Moving on, this flowchart illustrates the private party credit union loan journey. You begin with verifying eligibility and joining a credit union if needed. Next, you seek pre-qualification, usually with a soft credit pull, followed by selecting the vehicle. Then, the lender compares the vehicle's value to NADA or Kelley Blue Book and requests required documents such as the bill of sale, the title, identification, and proof of insurance. After underwriting review, you receive conditional approval. The lender verifies the seller and sets the funding method, which can be a credit union check or electronic disbursement. Upon title transfer, final funding occurs. Notice the branch, where small loan amounts under approximately $7,500 may only qualify for shorter terms or even result in denial. Additionally, loans under $5,000 are commonly rejected or priced at significantly higher rates. Next, here is your approval checklist. First, join or choose a credit union that is strong with used and private party financings. Then, get pre-qualified, which may involve a soft credit pull. After that, shop for vehicles that will meet lender value guidelines on NADA or Kelley Blue Book. Gather your documentation, including the bill of sale, the title, identification, and proof of insurance. Importantly, confirm that your loan amount meets the credit union's minimums, ideally $7,500 or higher. Choose your term length, where 72 months yields the lowest minimum payment, but plan to pay it down like a 48-month loan. Finally, submit your application, respond promptly to underwriting requests, and coordinate the funding and title transfer. Meanwhile, let's ensure your paperwork is complete. You will need a bill of sale with accurate buyer and seller information, the vehicle identification number, the purchase price, and the date. You must provide the original title, free of lints, or include payoff instructions if the seller still owes money. Include VIN and mileage verification documents, and an insurance binder that lists the credit union as the license holder. Collect the seller's identification and contact details, and if the seller has an existing loan, obtain the payoff letter from that lender. Perfect documentation is not optional. It is central to getting approved and funded quickly. Now let's examine typical minimums and terms. Many major lenders set minimum loan thresholds, and loans under $5,000 are frequently rejected or priced with significantly higher rates. Between $5,000 and $7,499, you might find approval, but terms are often limited to shorter durations, such as 24 to 48 months. When your loan amount meets or exceeds $7,500, you usually qualify for standard terms of 60 to 72 months and stand the best chance at the lowest rates. These are general patterns, and individual lender policies vary. In contrast, here is a side-by-side comparison. Credit unions, being member-owned, generally provide lower interest rates and are friendlier to older vehicles. They also tend to have more experience and better processes for private party transactions and make faster, local underwriting decisions. Banks, on the other hand, often charge higher rates for used and private party loans, enforce stricter rules on vehicle age and mileage, require less flexible documentation, and rely on slower, centralized decision-making. This comparison highlights why credit unions dominate this niche. Next, here is the payment strategy that preserves flexibility while minimizing interest. Select a 72-month term to secure the lowest contractual payment, which protects your monthly cash flow. Then, deliberately pay at a 48-month pace by making larger payments. For example, instead of paying around $50, pay $150 to $200 when possible. This approach keeps your safety net while dramatically reducing total interest and shortening the payoff period. In effect, you enjoy the best of both worlds: low required payments and a fast, debt-free timeline. After that, consider this amortization timeline. The first track shows a full 72-month payoff when making only minimum payments. The second track depicts the accelerated plan, finishing around month 36 to 48. Both tracks start at approval and first payment milestones, include a midterm check, and conclude at paid-in-full dates. The accelerated track ends much earlier, highlighting the substantial interest saved. This visual reinforces that paying more than the minimum converts a long-term obligation into a shorter commitment. Quick quiz time. Which statement best describes how minimum loan thresholds affect private party financing? Option A says amounts under $5,000 often get the best rates. Option B says amounts of $7,500 or more typically unlock 60 to 72-month terms and better rates. Option C says lenders do not care about loan size for term length. Option D says any amount qualifies equally for private party deals. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. Many lenders set minimums around $7,500 for longer terms and the best rates. Amounts under $5,000 are frequently rejected or priced with higher interest. Consequently, loan size significantly influences your available term lengths and pricing. Here is your second quiz. What is the smartest way to use a 72-month credit union loan on a used car? Option A is to always pay only the minimum for 72 months. Option B is to choose 72 months but pay extra to finish in approximately 48 months. Option C is to choose 48 months but pay less than required. Option D is to avoid credit unions entirely. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is B. Selecting a 72-month term offers the lowest required payment and preserves flexibility. By paying extra each month to target a 48-month payoff, you reduce total interest substantially and shorten the loan duration. This strategy balances cash flow management with aggressive debt reduction. Furthermore, avoid these common pitfalls. Do not pursue cars that will not meet NADA or Kelley Blue Book valuation thresholds. Ensure your documentation is complete to avoid underwriting delays. Be mindful of minimum loan amounts, as falling below them can limit your approval options or result in higher rates. Finally, avoid paying only the minimum for the entire 72 months because it maximizes your interest costs. Next, let's reinforce the key points. Join a strong credit union as early as possible. Choose vehicles that will pass NADA or Kelley Blue Book valuation checks. Aim for a loan amount of approximately $7,500 or higher to access better terms. Select a 72-month term for flexibility, but pay it down like a 48-month loan. Finally, pay $150 to $200 instead of the minimum to save thousands in interest. Before we wrap up, an important disclaimer. This content is for educational purposes only and does not constitute financial, legal, or tax advice. Interest rates, terms, and underwriting policies vary by lender, region, and over time. Always verify current requirements with your chosen credit union and carefully review your loan agreement before signing. Finally, let's summarize your action plan. Join or select a credit union with strong programs for used and private party financing. Secure pre-qualification. Then shop vehicles that will pass NADA or Kelley Blue Book value checks. Aim for a loan amount around $7,500 or higher to unlock longer terms and better rates. Choose a 72-month term to preserve flexibility, and then pay it down at a 48-month pace. By paying significantly more than the minimum, you will crush interest charges and finish much sooner. Thanks for watching. If this helped you unlock better private party auto loan rates, please like the video, share it with a friend who is car shopping, and subscribe for more money-smart strategies. In the comments, tell us your credit union wins, your questions, and which lenders you want us to review next.